What's up, fuckers? Throwing together a quick update video. I know it's late. I'm going to do it anyway. I will be touching on SPY in this video as well because some people just freak out when they see a pullback. I did call for this, I think over a month and a half ago, maybe 2 months ago. I called for a pullback on SPY once it saw 460. So I'm going to cover SPY in this video because it is going to all-time highs. Whether Michael Burry is selling his position or not, I don't care what the fuck Michael Burry is doing. And nor should you. So jumping into the macro on SPX, and this dates back to the late 1800s. It's a repeating fractal over and over again. Blue, green, megaphone, breakout of the megaphone. By the way, every breakout of the megaphone is all-time highs. So you break out of the megaphone, all-time highs, retest, bull run to all-time highs. Blue, green, megaphone, breakout, all-time highs, retest, bull run to all-time highs. Blue, green, megaphone, breakout, all-time highs, retest, and then bounced off and had a very nice bull run all the way back up to 460, 4600, and is now cooling off and seeing a retracement. So this is a repeating fractal on SPX that dates back to the late 1800s without fail. Every megaphone, breakout, retest, bull run to all-time highs. So that's where we are now. We're at the end of the iteration here of the current macro, the breakout, the retest, and heading towards all-time highs. It's not going to happen instantly, but we are climbing, and right now we're seeing a pullback. Let me really quickly just jump into my SPY chart. I haven't covered this in a while, so I know there's a lot going on here. I'm going to try to break it down as best as I can. I'll just start with the channel here. This ascending channel that you see on SPY here pretty much took you to all-time highs, and during SPY's time in this channel is when AMC and GameStop, the rest of the meme basket squeezed in 2021. So right here, January, right here, June. Nonetheless, ascending channel took you straight to all-time highs. From all-time highs on SPY, 480, you break down into this descending broadening wedge, come all the way down, and then you find a bounce off, reject, finally break out of the descending broadening wedge, retest, bounce off. And I mentioned the descending broadening wedge transitioned into an ascending triangle as well. So you have this red line here and the bottom of the channel here. So this is an ascending triangle here. The descending broadening wedge transitioned into an ascending triangle. Once we broke out of the wedge, we rejected the top of the triangle, retest the wedge, reclaim the triangle, break out of the triangle, bull run to 460. So with that being said, I've mentioned multiple times that this move, this bottoming action on SPY is perfectly symmetrical. So the boxes here that are colored are showing the symmetry on SPY, the symmetry on the move. So the blue box is your middle. You have one break above here just to retest the wedge. Coming into the red, you break below this horizontal line I have drawn here at 380. On both sides, you break below it. On the left, a little bit lower, again, to retest the wedge. But from that point, you bounce up to 418 on the dot on both sides where you find a rejection. Come down to 380 on the dot, wick there, find a perfect bounce. Bounce up, break 430. You get this cup move, and then the bull run to 460 is where we left off. Haven't covered SPY in a while, but I did say from 460 we would be pulling back. And I actually want to mention something, because this pullback might not be done here. So 460 would have been the symmetrical equivalent of this move here. And then from that point, you find a very nasty sell-off. Just looking at the symmetry, working backwards over here, you find a very nasty sell-off to come down and pretty much find a bounce at that 418, 420 level. It looks like this is what we might get right now. I'm not sure if we're going to come all the way down to 418, 420. But I would not be surprised to find a bounce at 430. I think that's where we're going to find a bounce. Not only because this is a breakout here, touch points here, touch points here. That would be a retest of a breakout there, but it would also bounce us at the bottom of the channel. So once again, SPY has an ascending channel that it's been trading in for almost a year, so since November. So with that being said, this is actually very good timing if we're looking at correlation with AMC, because the January squeeze right here, you actually reject the top of the channel and find a very nasty sell-off and then pretty much come back to the bottom. I mean, you're not really coming to the top, you're not really coming to the bottom, But nonetheless, around the time the meme basket was squeezing in 2021, SPY was selling off drastically, and it looks like that's what we're getting now. SPY has been very red as of late. This is completely normal. This is a perfect retracement. I mean, I've covered this multiple times. Since November here, you're forming higher highs and higher lows to the upside on SPY. There is nothing bearish about this chart whatsoever. Broke both of its macro patterns, the descending broadening wedge and the ascending triangle, and topped out at 460, the symmetrical equivalent that I was looking for, and is now pulling back. So it looks like we're going to get a pullback to 430. I'm not saying that we have to, but I would not be surprised if we did. I mentioned that 460 was possible the symmetry would conclude, and we could expect different price action, but it's actually still following perfectly to a T. So I'm not sure if we get the full pullback to 418. I'm not sure if we get the full move to 418, 420-ish, come down. I mean, once we broke this ascending triangle here, we never really tested it. I mean, I'm not really counting this as a retest of a macro break. So I don't know. That would make sense, but at the same time, you'd then be breaking support at the bottom of the channel. So I'm leaning more towards we're going to be finding a balance around 430. That seems a lot more reasonable to say. You know, bouncing on 430, you have rejections here, rejection here, rejection here. It would make a lot more sense to me to bounce at 430. And it actually intersects perfectly with the bottom of the channel. So you have two layers of support here at 430. So for now, that's what I'm going to be looking at SPY. I mentioned the last time I covered SPY, whenever that was, probably about a month or two ago, that I'm not going to be touching SPY for the time being. And that's it. That's pretty much it for SPY. Everyone freaking out about all the markets crashing. Michael Burry, you know, the legend, sold his whole position. I don't give a fuck what Michael Burry did. I'm telling you, SPY is going to all-time highs. So, with that being said, let's jump into AMC. And one last thing, SPY is rallying in this channel the exact same way that we saw back here while the meme basket was squeezing. So this looks very nice. So, jumping into AMC now and starting with the macro. Once again, downtrend from 2017 until you squeeze January 2021. The comparable of this would be the downtrend from the breakout of the flag from the June highs. So downtrend to present day. Macro break, this gap down right here. Macro break, this gap down right here. The W that plays out sideways on both sides. And then just laddering down one step at a time. 6 points on both sides. Takes you to the end of the blue. And then from that point, you drop to the flat portion where you have 3 touches on the bottom. The third touch is the lowest touch, the lower low that we were looking for. We finally got it last Friday. From that third touch, though, you form an uptrend, which breaks you out of the triangle, and a straight line into your squeeze. So that's where we are now, having dropped from the 6 point, 1, 2, and 3, the lower low, and now forming an uptrend off the lower low. This will be breaking us out of this triangle here and leading to a squeeze. So this looks very good. With that being said, we're going to jump into the micro, semi-micro, if you want to call it, the flat portion, the flat iteration of AMC. So the 1, 2, and 3 touches compared to the 1, 2, and 3 touches you see here. So jumping into that now, and I've covered this in all of my latest videos, and I'm going to continue to cover this. This will probably be one of the only charts that I cover as far as AMC goes. There's really not much else to say here. As far as I'm concerned, this is picture fucking perfect. So on top is January 2021. This is your macro break right here, and I don't know if I'm in the way. Your squeeze, the gap up to your squeeze January 27th right here. And then on the bottom, the flat portion, it's playing out the exact same way. It's never going to look exactly the same, but the touch points here are perfect. Once again, pay very close attention to the red and blue horizontal lines on both sides here. So 2021 cycle, you come down to your first bottom, breaking below both the red and the blue horizontal line. Very choppy down here. And over here, same thing, breaking both the red and the blue. You get your first bottom, very choppy. You got a few pokes above the blue line, same as you see here, before you gap up from there. So you have a gap up right here and a gap up right here. From there, 5 points, 5 peaks higher every time. The white dots that you see here. Again, this played out much faster in the current cycle than it did up here, and this was a lot more dragged out. And then from there, from your 5th point, you come into the final iteration of AMC, the W with the tri-peak, your lower low on the third bottom here, which forms an uptrend, and a breakout and a squeeze from there, which is where we are now. So from that 5th point, you come down again, break below the red horizontal line, bounce on the blue, back up to the red where you find a rejection, and then you come down to your second bottom, breaking below the blue line. Over here, same story. Downtrend breaks you below the red, bounce off the blue, reject the red, come down to your second bottom, breaking below the blue line. From there, gap up into your tri-peak, 3 pokes above on both sides. This was very dragged out, and we got a very nasty fake out here. This candle actually went to $9 after hours with extended hours on. I mentioned multiple times that threw me off on the tracking big time. I mean, that move was not supposed to go to $9. Not that it's impossible to happen. I mean, we see stuff like that all the time when we're looking at fractals, moves that are exaggerated. But nonetheless, that threw me off. This whole time, though, I was waiting for the lower low. This entire time, calling for it. 2 videos ago, I showed the receipts. I showed video clips from my older videos. We're looking for the lower low this whole entire time. Bottomed out at like $4 here. Formed this uptrend. Got to move to 9. Crazy ass fake out. Came down, and then we finally got the lower low we're looking for. So we have finally checked off the lower low and the final landmark to the downside on AMC. And like I've been saying, from this point, we will be forming an uptrend that will be taking us to our squeeze. So far, so good, forming higher highs and higher lows here. Let me just really quickly mention something once again. Both your second and third bottoms, you're rejecting this red horizontal line. So rejection here, gap down. Over here, rejection, gap down. So second and third bottom, rejecting that red horizontal line where you have the 3 pokes above for the tri-peak. And in the previous cycle, same story. So red horizontal line, rejection here, second bottom, rejection here, third bottom. Again, these took longer, very dragged out downtrend compared to the current cycle where we just gap down straight to the bottom. Not complaining. We don't have to sit through 1-2% red days to get all the way down. We didn't have to do it in April, and we didn't have to do it now. We just got a knife after hours straight down to the bottom. This looks great. And once again, what we're looking for here is a break back above this blue line. Roughly 401 to 408 is what I'm looking for, a break above this. Theoretically, it should be a gap up. I'm fully expecting it to be a gap up over this blue line. As you see here from your third bottom, you form this uptrend. There is a gap here. You gap over the blue, come up to the red, come down to the blue for support before you break above the red for good macro break, squeeze from there. So that's what we're looking for. 2 levels to break. Blue line, 401 to 408. We're probably gap up above that. Most likely we will gap above that. Reject the red line, 520. Who knows if we make it all the way up to 520. We didn't up here, but it's very possible we do come up to 520, come down to form support before breaking over. And then once we break this red horizontal line on AMC, 520, it will break with a gap up like you saw back here, and that will be your macro break and take us to the squeeze. All the gaps are the same. So I'm fully expecting to gap up over this blue line and then gap up over this red line once the rest of this finishes playing out. So zooming in, and this is just taking a closer look on the final iteration. Again, what we're looking for here, you have your move in the green here, your rejection takes you to your second bottom, your tri-peak, and then your rejection off the red line again, taking you to your third bottom, and then the same story here. So second bottom there, reject the red again, third bottom, tri-peak poking over. Very symmetrical move here, and that's what I'm looking for down here as well. So we're looking for pretty much this inverse. So a bounce back up to the red, you come down to the blue, come back up to the red, gap up over it like you see right here. Straight line to your squeeze from there. Once again, we are running through the flat portion faster than the previous cycle. So the way this played out leading up to the January 2021 squeeze was 319 days, and then in the current cycle was 253 days. Doing the math on this, I calculated this, I showed it in my last 2 videos. 319 divided by 253, 1.2 times faster. In the current cycle, we're playing this out 1.2 times faster. From third bottom to peak, 15 days. 15 divided by 1.2, 12 days. From when I made this, 12 trading days lands on August 29th, 7 trading days post-OPEX, like the previous 2 squeezes we saw January and June. And not only does it land 7 trading days post-OPEX, but it's the week after the reverse split and conversion of APE into AMC, which, if you've been paying attention for the past couple months, I've mentioned multiple times, is the catalyst for the squeeze. So this looks very good. I'm expecting this to play out relatively fast. I'm thinking things are going to be accelerating pretty quickly here. On a micro level, what we're looking at on the uptrend is we're just tracking the channel. This is just a crayon chart. Don't really, don't take this like I don't know. Just take this shit with a grain of salt. It's tracking on the micro is it's impossible. Like, to put it simply, it's impossible to do. But the best I can do is just give you a roundabout what the price action is going to look like. So that's what I'm doing here. And my scenario for tomorrow, I have two actually. The first would be a very sideways choppy day. Just reject from where we closed after hours, break below this trend again, bounce up, reject it, double bottom, bounce up, reject it. But this one's a little bit lower than it should. We should be forming higher lows here. But pretty much where we are on the uptrend, I would say, is right here. So from your third bottom, you get this first touch in the green. As you see it here, you come down, you have the uptrend back up, come down, uptrend back up to this red square. As you see it here, multiple tops here, a couple wicks there. I think it's 5 wicks right there. And then over here, same kind of top action here before you reject that and then break below the bottom trend as we did. You actually reclaim it a couple times. You're just chopping down here, trying to fight back for the support. So it's very possible that this is what tomorrow looks like, a very choppy day down here. It's also possible that we gap up. I know that's two very different things, but it doesn't have to follow the January uptrend perfectly. And I do want to mention something else, because this move that we're seeing here, we have seen multiple times before from the gap down, and not even from gap down. So we have seen this pattern play out multiple times, and it always leads to a gap. So, a perfect example is right here, actually. So this move that played out here is the exact same move you're seeing here. Same fractal here. It's not always going to play out the exact same way. Like, what I'm saying is it's not going to look exactly the same every time, but it's the same thing. So you see it here, you see it right here, another gap up right there, it's right here. It's all throughout this. It's right here. All throughout the chart you could find this. Right here, you see it again, gap up from there. Right here, it played out much faster right here, but the same shit right here. It's all over the place. You could find this pattern. This will be leading to a gap up over this blue line. Will it happen tomorrow? I can't say for sure. It's definitely possible, but it's also possible we're just chopping, like what I just showed you on the previous slide, where we're just chopping below this trend here, just fighting to reclaim support. As of right now, we closed above. I will say this, because I was looking at this before. Most of the price action when you break below here, you're just wicking up. Just so you have, this is a hour chart, so you're just wicks over. You're not really closing candles above the trend. As compared to where we are now, these are all closes above the trend. So it's very possible that we do see a gap up tomorrow. I mean, it's possible that this could be the equivalent of this move here. So I don't know why I'm going so, like, micro tracking, guys. I'm telling you, it's never going to be perfect. I'm just following this on a day-to-day basis, trying to get my best rough estimate. Never going to be perfect, but what I can say is that this will break us over this blue line, 401 to 408, which will break us over 520, which will lead to a squeeze, just on a macro level. Because the macro does not lie. The micro tracking, micro fractals, it can be tricky. And everything's going to look the same, and it's easy to get lost. But on a macro sense, the macro does not lie. So that's what we're looking for. We're going to be in an uptrend. That's it. Bottoms in, higher highs and higher lows from here on out until we squeeze. And like I said, two key levels: this 401 level, blue line, and the 520 level, the red line. This is what I'm looking for: a break above this and a break above this red line. As long as we're in an uptrend, I don't give a fuck what happens on a day-to-day basis. So that's what I'm looking for. Break the blue, come up to the red, reject it, retest the blue, break above the red, squeeze. That's what I'm looking for. So that's it for the video. I'll catch you guys in the next one. Peace.